Here's the brutal truth about Bitcoin right now. While everyday investors are throwing their money at every dip, the smart money is quietly heading for the exits. And this disconnect could determine whether we're heading to $118,000 or crashing down to $105,000 next. Essential points to consider. Small-scale investors are aggressively accumulating Bitcoin during price declines across both spot and futures trading platforms. Yet substantial selling pressure from high-volume traders continues to suppress any meaningful price recovery. The probability of experiencing another liquidation avalanche down to the $105,000 level appears diminished. However, there's a clear misalignment between investor psychology and what the comprehensive volume analysis actually reveals across different trader categories. Bitcoin and Ethereum are currently fighting to recapture the price territories they surrendered during last weekend's brutal 3-day sell-off that extended through Monday. Bitcoin has managed only a modest 2.4% bounce from its $108,665 bottom, while Ethereum demonstrated superior resilience with an 8.26% surge to $4,663 from Monday's $4,310 low point. But here's where it gets controversial. The trading data reveals a fascinating psychological battle unfolding in real time. Smaller retail participants, those trading between 1,000 to 10,000 units, have been consistently net buyers throughout the entire correction period from Sunday through Wednesday, according to anchored cumulative volume delta analysis. These everyday traders are essentially betting their hard-earned money that this dip represents a golden buying opportunity. Meanwhile, the heavyweight players, whale and institutional-sized entities managing 1 million to 10 million unit positions, have been systematically offloading their holdings during this exact same time frame. However, and this is the part most people miss, the intensity of their selling has noticeably decreased as Bitcoin managed to reclaim the $111,000 psychological level. When we examine the granular trading patterns more closely, the picture becomes even more intriguing. On Binance, retail traders have been aggressively opening long positions in both Bitcoin spot markets and perpetual futures contracts throughout every price decline. Simultaneously, the institutional crowd has maintained their selling stance across the same platforms. The numbers from Coinbase tell a similar story. Retail participants have generated an impressive $101.253 million in net purchasing activity within the Bitcoin spot market. In stark contrast, institutional players across both Coinbase and Binance have been net sellers, with perpetual futures markets witnessing approximately $7.5 billion in position unwinding during the analyzed period. This creates a critical question. Are retail traders catching a falling knife, or are they the smart money this time? The underlying dynamic reveals that whale-level selling pressure continues to dominate market momentum, while retail and medium-sized participants attempt to establish price floors. These smaller players appear convinced they're either securing Bitcoin at attractive valuations or positioning themselves for a rapid snapback rally toward the $117,000 to $118,000 range. Despite this retail optimism and positive smaller order cumulative volume delta readings across major exchanges, Bitcoin remains trapped within a short-term bearish trajectory. The $120,000 versus $105,000 question that's dividing traders. Liquidation heatmap analysis from Highblock reveals that Bitcoin absorbed significant buying interest in the $111,000 to $110,000 zone during the weekend massacre, with another notable concentration of potential liquidations clustered around the $104,000 level. While a breakdown to the lower liquidation zone seems increasingly improbable given current market structure, the persistent dynamic of large order selling, significantly outweighing retail accumulation, continues applying downward pressure on Bitcoin's price action. And this is the part that should worry everyone. Traders anticipating a period of sideways consolidation need to meticulously monitor the anchored aggregated daily cumulative volume delta to determine whether this institutional selling pressure begins to subside. More importantly, they must assess whether any reduction in selling volume corresponds with shifting sentiment patterns among different investor categories. The million-dollar question remains: will retail traders' conviction prove prescient, or are they simply providing exit liquidity for smarter money? The answer could determine whether Bitcoin's next major move targets $118,000 or crashes toward $105,000. What's your take on this retail versus institutional battle? Are everyday investors finally getting it right? Or are they about to learn an expensive lesson about fighting the smart money? Share your thoughts. This controversy is far from settled, and the next few weeks could prove pivotal for Bitcoin's entire bull market narrative. Important notice: this analysis contains no investment recommendations or financial advice. All trading and investment decisions carry substantial risk, and individuals should conduct comprehensive research before making any financial commitments.